So basically, we go over exactly what happened quickly here. This was the beginning of the day, and effectively, the name of the game has been to hold. It's been choppy for anyone that has tried to get exposure today. The entire process of the day leads to people struggling to be in for the move to the high of day. That was the idea. We were up in here. Is that the entire process of the day leads to people struggling to be in for the move to the high of day. Those that are late to the party are paying the price for not holding, essentially. And basically, what I said after that was this is the daily chart. We can see that we're basically right up at the high, and effectively buying up here is high. I've said to hold for so long, reap the benefit if you listened. If you are late, and it will be more difficult to maintain a long trade from the daily chart. It's cringe. I don't endorse it. So like definitely no buying at the highs. If you're in, then you're part of it. If you're in from any time I've said to hold, then you're okay. But if you're trying now to be part of it, it's too late. Now patience is because we're closer to the next new thing. It's not essentially the best idea to go in for the last of what is left of an old thing. And then basically from then on, I mentioned, contrary to popular belief, this move is to lead to the highs again by the end of it. It's meant to make people think, to give up their long trades. And if you focused on holding and hedging, like I said, then you're waiting for new highs, holding. Taking profit on hedges is acceptable, but the market is showing that it is being difficult for traders that thought that today was going to be like yesterday for them. Yesterday was good for people that had the integrity to hold too. Ironically, that's what I said to do, yet it seems to be inhumane for people to be on the right trade. And that is what I think is interesting about this is because it's like conditioning. I think conditioning is huge. A lot of people saw what was happening yesterday, and yesterday was very clear as well. We can see that we broke a red yellow line and it went up and used that line multiple times. But effectively, now we have another one. And went on to say, it's human to give it up to fight for the harder area. Um, Nobody would buy on the 1 minute chart if it looked like the daily. Everyone would have the patience. And for those that chose to hold, it's nothing different than the situation before the report. They took away the report. What a surprise. Soon we will make all sellers into buyers or losers. Then, so we are already here. And all of the people, all of what people feared, it is seen clearly as an opportunity by some bigger entities, and they just had to wait for people to reposition and soak in all the BS news before the market allows the assets, long trades, to continue higher. And basically, this is like a lot of time where people get to open the chart and tell each other that today's a bearish day or it's a down day. And effectively, we're all contained within this movement from the report. It's like we broke the trend, and anybody that tried to chase is getting wiped out. But at any time, was it right to buy into this move? And do you think that this is an appropriate reaction from the market to the people that chose value close to all-time high to buy up here? But every single one of the videos that I've made has been very much in like informative of exactly that you can hold from a lower spot. Oh yes, thank you. It's also like I mentioned, it's not like it's because we're positioned or the market, essentially the institutions are positioned from today that we continue, but they're pushing assets higher that have been held. It's not because they're positioned from the report, like a lot of individuals would be if they are part of this. And it came back over top of everything that they did. So quite interesting. And I think it's actually quite normal. And when you really look at what happened, it's like we had a consolidation and it spiked out of it just to return back, and here we are. And that's what we've done. And of course, the imbalance is coming up. And we're doing it from the 50% retracement. So already half of the entire day's movement has been erased, essentially to meet the end of the day. A controversial point because any decline that is had off of this level will give us a triangle. There's no way that a downwards movement doesn't give a triangle. It can do this one, or this one, or this one, or this one, and any one of those levels, if we get to them, means a triangle. Like I'll show you how. From here to here to here, first triangle, second triangle, third triangle, fourth triangle, and anything between these triangles is also a triangle, obviously. At what point does it not become a triangle? And what pullback could we make that doesn't triangulate it? So, situation that quite appropriate for the end of the day here. And using the blue line to make that could be really attractive as well. Like making the triangle off the blue line, at some point hitting that. And I mean, like, well, we could see what this angle looks like here. A little bit less. So we did talk about it going sideways as well. At the end of the day, this is now the POC. We've went sideways more here than we have any other place the entire day. And it's directly because of this movement here. You want to know where we saw this before? We analyzed it at the beginning of the day. This node right here fits perfectly inside of that. The time that it takes to do this, suspiciously particular. Reminds me of that. And could we get this, except in reverse here, to hit the blue line? Wouldn't be surprised, after all, it fits in line with what I was talking about with it getting to the blue line anyways. So I can see that putting two and two together, you have this area, this area that undeniably was associated with this movement here and this movement here. So God forbid it gives us one of those movements, having made that consolidation, because that's what it was responsible for doing before. And I mean, we could do that again with the other consolidations. We can see that it too also fit the node. Like it's an average size node that we've been using for quite some time. We can even see that, when we make a consolidation that's all messy and everything like that, we take a consolidation that we're familiar with and we put it over the environment. Surprised to see that that is neatly contained within the same amount of space as our average consolidation and our current consolidation. And we haven't seen this throughout the day. You know that QQQ is likely not even to show this consolidation anywhere but today? Like, what are you supposed to take this and put two and two together? A lot of people you can count on are not going to be doing that. What is this? Terrible. But a lot of people don't even know to change it. So, but if it was like something that was working in the benefit of everybody that was involved, you would think that every time somebody searched up QQQ in the description, it would say, "Hey, this is not this is actually," or they would say, "Hey, this is a derivative of the actual index." And if you want the full picture, why don't you look at the index, as it's something that's meant to be used as a benchmark, and you're meant to, you know, analyze that, because after all, QQQ follows the index. That's why it's not the same price as the index, because it's a way to get exposure to the index. Because the index is an average price of, or it's like it's an average of all of the stocks contained within the index. So it's like, why uh, why would we ever think that we can actually buy that? This number doesn't represent anything that we can actually buy. We can only ever trade derivatives that follow this the best they can. The most that you'll ever get, honestly, is when you actually trade a CFD with a broker that says, "Hey, I want a contract with you for the difference in price on the index." You're not. Are you trading the index? Well, yeah, you're pretty much trading the index at that point. But you're not buying the index, like you're doing the contract. That contract is technically a way to get exposure to it, but it's like that's what's happening when you make a trade on a CFD. And that's just one way to get exposure. Nothing wrong with using derivatives, but it's just when we see that the derivatives have differences, like deviations or different prices and different times that they're available, like QQQ. It's like we should always reference the actual index itself. Yeah, what's up? Generally I keep it pretty much the same, like 30 ticks, but like I'll adjust it as soon as I make it, uh, and basically shorten it. But it's not a It's not a huge deal when when it's moving like this. I don't think you don't have to be like super quick with it. And if you make it too tight, so that when the candles are so small, um, you get stopped out on a trade that you were right on, but because your stop was so tight and the spread is so crappy, you just end up getting stopped out. And then I'm just like, well, if you know a short-term move is going to happen and you haven't taken on much risk with the size of the trade, it's better just to give it that little bit of room anyways. And once it's appropriate to drag the stop down, then you can. But I don't think that it's really good to change it per se. Just keeping it the same. Like on days where like there's drastic movements and we can expect it to stay, you know, a higher size candle. Like when on the days where there's like a 20 point ATR, those are the days where I think it's okay to change it. But when it's really slow like that, it can be dangerous to make it too tight because then you start to have potentially negative experiences with the hedges, and it's better to just get the trade and protect it quickly by taking off profit as soon as possible, and then being a little bit more flexible with the stop is okay. But I'm a little bit more aggressive with taking the profit off, so that I don't have to be so like picky with the stop, and I can give it a little bit more flexibility and at the high and so on. Exactly. Yeah. Well, yeah, that's if you're trying to develop a core, it makes sense to have it a little bit wider, especially if it's an 11 low zone. Like you kind of want to give some flexibility when you're buying into the spikes on an 11 low zone, because like at the end of the day, it's worth being patient for the spikes in the zone. And it's like, well, it's good to manage, like not manage, but to measure how much space there is between the current price and the trend. And we can see from here, like I'm like, wow, look at how many, like it's miles away from the actual trend break. And I'm like, even if we ran to it, we would exert all of the energy that we had to break it and getting to it. And funny enough, now it's doing the right thing of going sideways. It's almost like when I said that they were impatient and they were running, like they paused it and like they were chilling now. And now the imbalance is about to come through. So that's the next major thing here. And I mean, it came exactly back to the 50. Like they managed to turn the entire day into a retracement right back to the halfway point. 50% retracement. This distance is a distance that we've used many times to pull back, and we honestly haven't seen it in a while, and it's pretty appropriate. So I'm curious if the imbalance will amount to that. So far, there hasn't been any kind of immediate response, but regardless of the pullback, whatever it decides to do, the last thing to break is the red yellow line, like I said earlier. But this is what I said, remember? Oh, the red yellow is the last trend to break. That was clear from here. We are at the last trend on the last. But today was a day where I could see it being a very negative experience for a lot of individuals that expected it to have a positive impact leading in from yesterday. And yesterday was only good for the people that held through the, movement. And I mean, under what circumstances did it come past any long trades? Like it didn't. And I never ever ever said to go long above that level. So it's all about maintaining. And I don't think that these highs are meant to be the high. I don't think that they're. I don't think that they're. We're gonna step on top of these highs, and I wouldn't be surprised if they became the middle. I'll write that in there so you can look at it. It's probably clear. Stepping on these highs. A negative response to the red yellow line so far. Whatever is sold off from the red yellow line will be bought back up, and by just the preliminary volatility. I'm curious about this too because I'm like, all right, let's say we break the trend. What is it going to look like? Well, we're going to have this node here. That's not going anywhere. When we come back to test it, that will be there. What could cause us to come back to that line? You know that that line's actually pretty steep for a long-term trend like that. It's actually kind of steep. If it doesn't retest it quickly, it's likely that it will retest from a lower point than where it breaks. But not like this. Wow, actually, let's look at that. What if it breaks? Okay, hold on. So when we got to the trend, it was fast, and it broke and it was slow. This time, it looks like it's not doing that. It looks like we're getting to it slowly. And if we break it fast, it would be different, undeniably. Would it affect our ability to retest it? Would the retest in turn be slow if the break was fast? I mean, logically, it's an idea. Think about it. Because it's like the last time we broke a trend, it was fast to get to it, slow to break it. This time it's slow to get to it. It may be fast on breaking it, slow on retesting. Because it was fast to get to it, slow to break it, fast to retest. Slow to get to it, fast to break it, slow to retest. Could be on the table. It's an idea. I think it's extraordinary, to be honest, that it even considers that, but this is what it's telling me so far. Pattern, and not going to be the same way that it was, but it will be very similar in a weird way. And I can tell it's the work of the entity in control. They respect this halfway point, like the big S wave. And like, what's funny about that to me is there was a triangle here. And it's like we did the S wave around the tip. That's where we are right now. And that's where we decided the 50 should be. is right, near all that volume in there. Wow. Okay. Do you know that that volume that's in there is actually volume from that triangle? Well, it doesn't really show any other volume in that triangle. Just the volume of the triangle. It's a little higher. Higher. Just mark that real quick. With I'll just make this one green. Represents the whole thing there, but I'm just gonna that look like. Oh, that's strange. Interesting. So when we were here before, we chose to put a lot of the volume in the red zone. And the amount of volume that we put there, it wasn't in the same way that we're putting the volume here now, but what we did was we made a consolidation and we went down and we had another consolidation below. And I recognize that pattern. We do that a lot nowadays. And this is bleeding into after hours movement when we were here. Funny enough, you want to know what's similar about that is the time that we were here. We were here at the same time, end of the day. So I'm like, okay, well, that's interesting. It's not the first time that it's made this time the end of day, or this place the end of day. Okay then, is that the distance that we had on the top of this area? Curious about the move below. Suspiciously particular that it seems like it started from that point and that it ended at that point, and this area could be the middle. Well, it is the middle, but of the dump. Yeah, so it's the middle of this too. I mean, it's not only the middle of the dump, but it's the middle of the rise. It's very centralized. A very like it's almost like they really were going for the centralization for the end of the day. Not a doubt in my mind that yeah, yeah. Oh yeah, yeah. That's my point. Yeah, it definitely chose this time or this place for this time. And I'm like, well, that's one observation that we could say is a matter of fact. It likes to return back to this time. But what's weird about it is, do you know that when we went to that time, we we came up to it on this move. That was the whole day. And now today we spent our time making this portion above, and then we have this weird portion that's otherwise a new portion, but it's a spike. So I mean that's what's different about it is it's a giant spike. And I look at this and I'm like, well, hold on, was that the spike that we had here? Wow, that's the same pullback that we had there. Did you know that that was a counter trend move? And it was associated with taking this movement before it and putting this movement pretty much after it. And I'm like, well, that was what that triangle did before. And we just did that triangle again. And I mean, like, now that triangle has led to every single downtrend breaking that I have on there. So I'm like, well, isn't that convenient? So it's an interesting day. I think today it was a matter. It's a very interesting day because there was a lot of big battle, I think, between the public and the institutions. It's a matter of those that have the integrity and those that don't. And by the midday today, looked like the sky was falling, and it looked like there was no hope for anybody. For most of the people that just took the chart with face value, a lot of people had all the time in the world to tell everyone how negative it was and how badly it was affecting them, and how long trades weren't working and how it was hard for them. But then I'm like, now most of the people that went through the difficulty are out of the difficulty if they chose to hold through it. And I don't think many people did or else we wouldn't be wouldn't be rallying, wouldn't be where we are, I think. And isn't it interesting that out of the sideways movement, it had the audacity to break the downtrend, the red yellow line, and it was the last line of of the day to break. And I'm like, well, I saw that one from miles away. That was going to be the end of the day, and I'll just reply to that message. It was the last trend of the day to break. See, that in there actually. Basically, now we have to watch out for a retest of the red yellow line, but I'll keep you guys posted throughout the night if anything happens. But hopefully you had a wonderful day, and I'll catch you guys later. Yeah, have a good one. Take it easy.